Schwab's entry into the spot crypto trading positions it alongside other financial giants like BlackRock, Fidelity, and this is signaling a broader trend of financial institutions embracing cryptocurrency. Analysts predicted this move could inject a significant amount of money into Bitcoin and other major crypto tokens, and it will drive Bitcoin's price closer to that $150,000 to $200,000 over the next year. So I want to talk about this Bitcoin. iShares Bitcoin Trust right now is trading at $55. Jones and David Shah are loading up on BlackRock's Bitcoin ETF.
Bitcoin has once again crossed the $100,000 threshold, signaling a renewed bullish momentum. This isn't just another price surge, it's the culmination of several converging factors that could propel Bitcoin to unprecedented heights. A $250,000 valuation by the end of 2025 isn't just a dream, it's a plausible reality. Institutional interest in Bitcoin is reaching new peaks. Major financial players are not just observing from the sidelines, they're actively participating. For instance, Standard Chartered's head of digital assets, Jeffrey Kendrick, now believes Bitcoin could surpass his previous $120,000 forecast, citing increased institutional inflows and regulatory clarity. This shift is further evidenced by the $5.5 billion that has flowed into digital asset funds over the past 3 weeks, with $1.8 billion directed specifically into Bitcoin products. The regulatory landscape is becoming increasingly supportive. States like New Hampshire have enacted laws allowing officials to invest up to 5% of public funds in major cryptocurrencies. At the federal level, the Office of the Comptroller of the Currency has clarified that national banks can custody digital assets, paving the way for broader adoption across the entire banking system.
It's a billionaire out there. Paul Jones has said that he made this the biggest investment in his whole portfolio. Now, this is a billionaire. Analysts say Bitcoin could reach $250,000 by the end of 2025. That's what I said 2 years ago. More than double where it's at now. So the ETF follows Bitcoin's price. Bitcoin doubles, so the ETF will probably go up a little bit higher because of hype value and premium value. So investors are moving money from Bitcoin as fears about inflation grows, but that money is going to start to flow back in as people see Bitcoin as digital gold, limited supply, and they can also protect against rising prices. So the government has approved Bitcoin ETFs back in early 2024. Institutions have been buying in since then.
Global economic uncertainties are driving investors toward Bitcoin as a hedge. Recent trade agreements, like the one between the US and the UK, have bolstered market confidence, with Bitcoin surging past $100,000 following the announcement. Ongoing inflation concerns, combined with geopolitical tensions, are pushing both retail and institutional investors toward decentralized assets like Bitcoin, seeking safety outside traditional markets. From a technical perspective, Bitcoin is exhibiting strong bullish patterns. After a period of consolidation, the cryptocurrency has broken out with serious momentum, signaling potential for further gains. Analysts are now eyeing $120,000 in the near term, with some forecasts pointing to $180,000 or even $200,000 by the end of the year.
The Schwab's $10 trillion bet, they're going to go into Bitcoin, just announced it by April of 2026. One of the biggest banks in the world plans to launch a spot Bitcoin trading platform by April 2026. They've already encouraged their clients to start looking into buying Bitcoin and buying and selling Bitcoin directly through their brokerage accounts. Now, this decision follows a 400 surge in traffic to Schwab's crypto-related webpage, with 70% of visitors being non-clients, indicating a strong investor interest. Now, this is what we've been talking about, is that during this lull period, the banks, the elite, and the rich are starting to control cryptocurrency. And that's the scariest part, man, because I started this in 2011. It was a bunch of tech people like me. It was a mix of people. It was a bunch of tech people like me. It was anarchists. It was anti-government people. And it was also people who just didn't like fiat currency. So it was a weird mix at first. And over time, what happened is that the business type people got in. And of course, they're more, I remember I was in 2016, I was in London. And in London, I was at a Bitcoin conference, right? Now I remember looking around and I said, one day these people that are here right now, these anti-government people, these anarchists, these wild people who are making money doing barely anything because the market was so easy back then. One day, all of these people will be displaced because the banks, the elite, and the rich will take it over. And that's what's happening right now. Bitcoin and cryptocurrency in general has almost all been taken over, but by the rich, the elite, and the banks.